Hey everyone, it's Sean coming at you on Wednesday, November 25th. Happy Thanksgiving to all you guys. Just wanted to kind of get everybody rocking and rolling here. I got a lot of great information to cover today. We're going to start off with mortgage application data, 2021 forecast from somebody I really respect and trust. We've been following for quite some time. We're going to talk about the 19.4 million borrowers or homeowners out there that should be refinancing and can definitely benefit from the low rates right now. What the surge in COVID may mean for housing, and we're always going to end off with a great realtor tip. And we got a couple of exciting things to touch base on. Briefly, we're going to start running through that. But first, I just wanted to, obviously, with Thanksgiving, driving into the office this morning, feeling super, super thankful and grateful for, obviously been quite a challenging year, different year, but nonetheless, there's been a lot of positives and silver linings from it all. So I'm thankful for my amazing family, my friends, our health and the health of those around us, and then just my amazing team that supports us and supports our clients every single day. Our clients who are the lifeblood of our business, and our partners out there that have trusted us with their clients and their businesses to help support them, whether somebody's refinancing or buying a home. So really appreciate you, and just wanted to take 2 seconds to say that. So a couple updates. What's happening right now, not sure if you know, but Tuesday is Giving Tuesday. And so we're really just trying to get the word out there about the Guaranteed Rate Foundation, how it can help some people. The foundation's probably something that, in terms of my career, means so much to me in terms of having fulfillment and being able to help others. As you guys know, one of the missions of our teams is all throughout the year, we're trying to do something to help support our communities with regarding St. Jude Children's Hospital, fundraising for them, the Greater Boston Food Bank, which is so important. I just read an article in the Globe this morning how that's more important than ever in terms of the need for food for people that don't have the means to get it, which is crazy to me. The Souls for Souls and the Guaranteed Rate Foundation. We've really had the opportunity to utilize the foundation to help some people in our community over the past couple of years. And it's definitely impactful, meaningful, and something that we hope to do more of. So the foundation is an organization within Guaranteed Rate. The leadership of our company support it and actually cover the cost of administering the entire foundation. So all the donations, the money comes into the foundation is from the employees of Guaranteed Rate, as well as through the through the fundraisers we've done in the past. But the mission is to help people that are just suffering from extraordinary circumstances, things that ultimately, nobody ever wants to deal with, and we just ultimately want to help directly to those in need, not go through a middleman. So, after reviewing the applications, the committee grants funds with careful consideration, providing lasting impact. So Giving Tuesday is right around the corner. It's the Tuesday after Thanksgiving, as I said, and it's a typical day where people donate to charitable organizations. So what we're asking right now is we are asking for names of people that need some help. We are not looking for money. We're looking just to be able to help people. So if you can nominate someone, if you have somebody that you think needs our help, needs the foundation's help, please email me directly at shant@rate.com or send a direct message to us, and we can help you get the process started in terms of filling out the forms for careful consideration in the application. So obviously, especially around the holidays, it's been quite a challenging year. So we would ask you, if you think if you think somebody needs some help, just please let us know. So also this time of year, and this year has been especially challenging for small business owners. So we want to help support small businesses. They're important to our communities. They play a huge part. And so we know with the pandemic, those people have been impacted the most. And so we want to highlight small businesses amongst our social media. We want to, support those businesses by buying gift cards and gifts from those businesses directly. So if you have some great small businesses that we should know about, please post them in the comments below. Again, email us, direct message us, let us know. We will definitely reach out to them and hopefully highlight them in our social media pages, and hopefully reach out to them and spend some money at their businesses and during this time of year. So, all right, great news last night from FHFA, nice little gift that I am thankful for this morning. So they announced last night that Fannie Mae and Freddie Mac are going to be increasing their loan limits for 2021. So that's awesome. It needed to happen. It's been something they've consistently been doing over the last couple of years as home prices have gone up. So we've set new conforming loan limits, if you're wondering what that means. It makes it easier for homeowners and borrowers to buy more house with lower down payments and lower monthly payments. Remember, I've been talking over the course of the last couple months how the best rates and best products out there are the ones that are insured by Fannie Mae and Freddie Mac. So massive impact made. So what happened and what was announced last night, the new loan limits in many areas of the county, it's $548,250, kind of a weird number to remember. That's a 7.4% increase versus last year's limit of 510, and that goes into effect on January 1st. So we'll probably be able to start locking those loans for consumers probably in the next week or two here for loans that are closing after January 1st. So if you've been pre-approved already, you should get pre-approved. Every single county loan limit, every single county has a different loan limit. So if you're interested in how this impacts you, feel free to throw a comment down below with the zip code or the county. We'll reach out to you directly, obviously, through direct message or email. Feel free to email me at shant@rate.com with the areas that you're looking in, the counties that you're looking in, the states you're looking in. As you guys, I'm not sure if you know, but as a reminder, we're licensed all throughout the country at this point, so we can help you anywhere. So in Massachusetts, I know a lot of people that are on here following us and watching our information are local in here in Massachusetts. The loan limits across most of Massachusetts, again, the regular loan limit's 510. However, there's something called the high balance loan limit, which is in terms of rates and products, it's probably more important in my opinion. So the loan limits in places like, Suffolk County, Boston, Middlesex, Norfolk, Plymouth, Essex, those are all increased from 690,000 all the way up to 724,500. Okay, so that means that you can buy a single family home or a condo with as little as 5% down, get a fantastic interest rate. We're seeing the lowest rates of all time, and I think the average 30-year fixed rate right now across the country is like 2.875. So you can borrow money with those rates and up to that loan amount with the lower down payments. And the underwriting guidelines by Fannie Mae and Freddie Mac are generally the most lenient out there, easiest to underwrite to, easier for lenders, so in turn makes it easier for borrowers. So bottom line, great news for all home buyers out there, not just first-time home buyers, that Fannie and Freddie increased it, and it's right around the corner. So that's a great positive way to start things off. Some mortgage application data from our friends over at MBS Highway. Overall, mortgage applications decreased 0.3%, so nominal, almost non-factor from the previous week. So activity still buzzing along. I've never been so busy going into the day before Thanksgiving. We are seeing massive activity. We had a bunch of offers accepted. A lot of refinances came in every single day. This morning's already been crazy busy. So usually it's kind of like a day off, not so much this year. We're thankful for that. We love being busy. Refinances are up 98% year over year. They tick down 2% week over week, but again, it's 98% versus last year. And last year there was a full-scale refi boom already in effect. So massive increase there. Double the amount of people are refinancing and applying to refinance. If you haven't refinanced yet, or even if you have, we're seeing that a lot of our clients that refinanced at the end of 2019 are already refinancing again in 2020. Even some of the people that refinanced at the beginning of 2020 are able to refinance again this year. So it's something you should definitely be evaluating. We're going to talk more about that in a second. Purchase volume was up 4% last week and up 26% year over year. So we've talked about this in every single one of these calls. Everyone is reevaluating where they live, how they live, and what they want out of their house. And so it's created a massive amount of urgency. I said on last 2 weeks ago's call that it's the largest motivating factor to move in the last 30 years is this pandemic. And we're seeing that happen. There's been no slowdown in the fall. There's been no slowdown in the holidays. People are moving into the suburbs. We're seeing people move into those Zoom towns, like vacation type places and luxury type places. Bigger space is much more important because you work from home, you teach at home, you school your kids at home, you entertain at home, and you just need more space. And that's what we're seeing people do right now. So purchase apps are up big time year over year. Refinances are up big time year over year. In general, steady flow of business coming into the mortgage world right now. So somebody who I respect and trust and follow and have used as a resource for information for us is the National Association of Realtors Chief Economist, Lawrence Yun. We've actually seen him here in person at the Boston Federal Reserve a few years back. So it's definitely somebody that I recommend everybody kind of listening to what he's saying. I think he's a great resource of information. It makes it really, I like simple and I like easy, and he definitely is able to do that. So he's making his 2021 forecast predictions. So here's what he said, and it's a lot of the same things that we've been saying now for the last few months. So demand for housing and work from home demand for larger sized homes will continue as people are able to telecommute. Home sales in terms of transactions will rise 9%. So another busy year is forecasted. This year was one of the busiest on record. Home prices are in no danger of declining because of low inventory and a housing shortage. Home prices will rise. He's predicting 3% in 2021 after a 6% increase here this year in 2020. He's also predicting that the availability of a COVID vaccine, which has been in the news and has been really welcomed over the last, really over the course of November, and we're hearing that it's going to be available as early as possibly this coming month in December. So he's thinking that's going to revive the U.S. economy. Obviously, we've definitely seen a V-shaped recovery. Right now, housing markets leading the way in terms of the strength of that market. Yesterday, we saw the Dow go over 30,000 for the first time ever. NASDAQ's already at all-time highs. So in terms of the financial markets and the housing market, the backbones of our economy, those things are going great. He thinks his prediction is that the COVID vaccine and improved treatment and just kind of the fact that we've already been here and the fear of the unknowns kind of disappearing is that's going to get the U.S. economy in shape for a great year in 2021. And then he's also predicting that mortgage rates, as we've been saying, are going to remain at all-time low levels at or around 3% and hopefully below. The lower the better, right? So all the way through 2021. We've talked about a lot that, over the course of the last couple months, the Fed is acting, they're buying mortgage bonds, and then on top of that, they got a near zero interest rate policy going. So I think that's probably where he's coming from there. And then, we've talked about refinancing quite a bit. So I read a great article on Housing Wire this past week. There's 19.4 million potential borrowers out there that are able to refinance right now based on what's going on with interest rates. So mortgage rates are below 3% for 17 weeks in a row. What they're noticing is that the amount of high quality refinances is also increasing. So what they mean by high quality refinances, better credit scores, lower loan to values, lower debt to income ratios. So it's the most high quality refinances in history since they've been tracking it. But again, it's 19.4 million people are eligible to refinance right now, okay? So if you haven't refinanced, or even if you have refinanced, you should be considering it. It was talking about the fact that there's the average savings for somebody that can refinance is about $309 a month. That's a huge amount of money, right? That's a internal for your house a stimulus right there. That's $3,600 a year for as long as you have that mortgage. So $300 a month on average for savings. Obviously, that can vary based on the type of loan you have, the size of the loan. And there's other reasons to refinance as well. Again, people don't only just lower their rate and start their term over. We've seen a lot of people cut term, take some cash out, do some home improvements, maybe debt consolidation. But with these low rates, you should be evaluating what your options are. So there's a massive opportunity to save there. A refinance, just so you guys know, there's no obligation to do one. There's no cost for a consultation. Generally, we can figure it out in 10 to 15 minutes. So happy to chat with you. If you want to have a consult, email me at shant@rate.com, direct message us, and we'll make that happen for you. If you're a real estate agent, it also gives you a really great opportunity to reach out to your clients and let them know of the potential savings opportunity out there for them. They'll really appreciate it. Some people are distracted with the holidays, with the pandemic, the challenges with homeschooling, or whatever you got going on. So there's a lot of people that are surprised to hear how low rates are and the fact that they can take advantage of them. So definitely have that conversation. Okay, we got round things out here. Another great article on Housing Wire last week. So what does the surge that we're hearing about in COVID cases that we're seeing a lot that's happening, and as the states are starting to make restrictions, and it's just been right in our face that COVID numbers are going up, unfortunately, and there's what happens if there's another lockdown. So, and what happens to the housing market. So when this first happened, it's really important to remember kind of what happened last time. So there was the fear of the unknown. How long are we going to be shut down? How is the economy going to react to it? So there was 9 consecutive weeks of housing slowdown, right? There's a fear of the virus, the stay-at-home orders, the collapsing stock market. It was all happening at once, and nobody knew it was going to happen. Admittedly, I didn't think this year was going to turn out as great as it did at first, because it was just it was kind of crazy. Nobody expected this. So then the market stabilized, right? And the rate of decline stopped. We began to recover. The Fed and the government jumped in and passed a stimulus, which I think made a huge impact. And we turned a positive year over year in terms of housing and got a true V-shaped recovery, as I talked about a minute ago. Financial markets are at all-time high levels. Housing's never been more expensive and more robust. So now with this surge that we're seeing, people are wondering if history is going to repeat itself. And while the surge obviously could have a negative impact, I think this time is going to be different. And that's what the article said. It said the reason they believe that is, we've been here before. This isn't like, we kind of know what to expect. We're more prepared. There'll be less panic. We've been living with this for 7 or 8 months. COVID tests are more widely available. Treatment for infections is showing promise. And then, the effective vaccines are right around the corner. We're talking about again in the month of December. So again, we think that because the demand for housing is so high, inventory is so low, that even if there's a surge in COVID and even if there's shutdowns, that housing will be less impacted than other markets, which is good news. And hopefully that makes sense. And then, one last thing we get asked about a lot recently, so we want to address, the housing market's clearly hot. People say, no, home prices are going up, bidding wars are happening. At one point, does this stop? Is there a housing bubble that's about to burst? I predict no. I think we're going to have prices run up for the next couple of years while inventory remains low. I think it's just purely supply and demand. Existing home sales last year came in at 6.85 million, beating estimates with the highest prices since 2006, right? This 14-year high. Days on market fell from 36 days to 21 days. So homes are selling much faster on average all across the country. What we're seeing on the mortgage end, the average application to closing time is also a week shorter than it was last year. So the expectation to close and close quickly to meet the demands of sellers is definitely higher than it was in the past. So I know, as of just speaking from experience, we took a bunch of accepted offers yesterday and they're all closing at the end of December, and then we got 2 major holidays in between, and that's just what the expectation is in the marketplace right now. So things are selling faster and things are closing quicker, and then there's as much cash as there's ever been out there. So almost 20% of deals across the United States right now are cash buyers. So 1 out of every 5 transactions is a cash buyer. That's pretty much the same as it was last year. So that there's, that's strong competition out there that wants to buy houses right now. So it can be, obviously, as a first-time home buyer, if you're dealing with cash, quick closings, it can be overwhelming. I think getting prepared and understanding what your options are and setting a clear expectations around your payments, down payment options, closing costs, loan products well in advance, and being prepared and being confident, I think will help you be empowered in terms of becoming eventually a homeowner. So, people are wondering, is there going to be a crash because home prices are going up? I think no. I think the mortgage industry has done an amazing job since the financial crisis because, there's just much more compliance. There's consumer protection. The mortgage products, getting a mortgage right now, if you're refinancing or done a purchase, that we ask for everything, right? We want to know everything about your credit. We're evaluating it. We want to know everything about your income. We want to know everything about your assets, and we're asking you questions. So the products are much more strict. The 30-year fixed rates never been more prevalent. We're seeing much less, like all the kind of funky products out there that got people in trouble in terms of payment option arms. There's much less interest-only products happening than there was in the past. So overall, the foundation of our housing in terms of the financing that our clients are taking is much stronger than ever, and that's been the case for 10 plus years at this point. So I don't think there's a bubble coming. I think as long as lenders are responsible, and as long as inventory stays low and the demand to move across the country as people telecommute and reevaluate stays strong, there's no bubble coming right now, in my opinion. So here's what we might be able to expect. In terms of data, at some point it's going to normalize. It might not stay as crazy as it is right now. Don't be afraid when things normalize. Don't be fooled into thinking that's a slowdown. It's just a normalization. So, unsold inventory sits at an all-time low of 2.5 months supply at the current sales pace. So down from 2.7 months supply in September and down from 3.9 months supply in October of 2019. So it's just getting, there's much less homes, and so inventory is going to control everything. Just like I think from an economy standpoint, unemployment the numbers, those have been coming down over the last few months, as we said in our last call. I think that's an important metric to watch, and I think housing supply is also an important metric to watch in terms of home price appreciation and demand. So, inventory's tight, but it's not existent, as we know. Transactions are happening at a higher clip than ever, and I also think it's a huge key for home builders to get out there and get building, and the municipalities to be granting permits and helping promote new construction. I think that will keep things affordable, and that will level the playing field. And lastly, our client tip of our realtor tip of the week. I think right now this is obviously a different year, something we're not accustomed to. There's no holiday parties. There's, you're not seeing your clients as much. So I think it's really important to communicate with your clients the way they want to be communicated with now more than ever. So I think one, I just want to give a quick little plug to my amazing team. Brianna and Nikki do a really great job with our webinars and our library in terms of data, and we have some great content calendars that you guys can be using. But definitely log into our groups and go on our Facebook pages. You can get access to this information, or reach out directly to Nikki and Brianna, and they will let you know how they can help you one-on-one or get you involved in our webinars going forward. But people are spending a ton of time at home. And they are trying to reevaluate, even if they just moved, what they're going to do in the future. Also, they're reevaluating what they can do with their current homes in terms of upgrades and renovations, or are they going to be buying a second home? All these type of things. It's important for you to be a part of that conversation. So you want to be communicating with them via email, via postcard, via mail, regular mail, phone, direct message, social media, text message, whatever it is. You want to communicate with your clients so you want to stay relevant, and you want to stay top of mind. I think it's more important than ever. So I think it's really important to have a plan for communication for the entire year. You should know what you're doing month by month, weekly, quarterly, and you should have different parts of your content. I think it's important to have, we have something called the social media content calendar. We're happy to share that with you and help you utilize it for your own, your own communication plans. I think it's important to set a budget and understand where you're going to source your gifts and content and your vendors and all that kind of stuff. So for more, tips, obviously we have some great resources on the team, and we have those amazing webinars. Feel free to hop on there, call me or call my team members. We're here as a resource for you to help you grow your businesses. So that's everything in a nutshell. I appreciate you guys. Again, I meant what I said earlier. I'm very thankful for the people that surround us and help us and support us. Means a lot to us. So thank you very much. I hope you guys all have an amazing Thanksgiving. Enjoy some great food tomorrow. And I'll be back at you guys in a couple weeks. Take care.